Hello, it's Cryptolyze. I hope you are well on this Monday, 18 September 2023. We're meeting today to talk about GRT, the graphs crypto. As usual, we will dissect it into two parts. Fundamental part, we are going to come back to what GRT is, we're going to come back to its news, and then we are going to head towards the graphs to project ourselves in the short, medium, long term on purchase prices, sale prices, and that starts right away. What is GRT? GRT is a protocol that aims to provide developers with a uniform basis, regardless of the blockchain in which they are developing. Concretely, what does that mean? This means that GRT takes care of taking the blockchain which has a different shape. It can be a circle, a square, a line, and always transforms it into a star, for example, therefore always an identical shape. Concretely, what does that mean for a developer? This means that he does not have to worry about which blockchain he is building on, the structuring of the data, whether the information is on the right, left, or in the middle. He absolutely does not care because GRT will take this information and always make it available in the same way and through an API. So an API is really the very foundation of the construction when we are used to developing on Web 2. So we are really in a standardization of the structuring and accessibility to development on the different blockchains thanks to the graph. Behind it, there are other features. There is the indexing functionality. Clearly, what does that mean? It just means that the graph lists absolutely everything on a blockchain and makes it easily available. That's a bit of the principle. That is to say that we will have what we call index tables, which are a structure. It's like having a map of a city, and it's much easier to find something specific. So it's really something that is done to simplify the life of the developer and facilitate the speed of execution of the data sets, therefore the information that is stored in the blockchains. We don't forget that the blockchain is a decentralized database. So obviously the data must be structured and the data must be accessible, and it is the graph which allows this to be done. Especially in a world where we are in a multitude of blockchains, where each time we have to navigate from blockchain A to blockchain B, perhaps we have a project like AAVE, which is developed on X projects. Well, obviously, it is not necessarily easy to structure code which may perhaps be different, depending on the structure of blockchain A and blockchain B and blockchain C. Going directly through the graph, we have access to all these functionalities. We are not obliged to develop specialized servers for each of the blockchains, and we can really concentrate on our own development. Next to it, we have the notion of subgraph. What is subgraph? These are blocks of data that are specialized and defined by different people. That is to say, I am a protocol and I need a set of data, therefore a particular set of data. For example, on a certain blockchain, I need information which is rather information A, C, and D. I do not need the rest. Well, this myself, I'm going to create a subgraph which will recompile all this information and which will be made available to me, so that I can very quickly retrieve this information in a simplified and accessible way. So if I have to summarize the graph, you have to understand that it is a protocol that is there to help developers build. It is a tool for decentralized applications and for decentralized application developers. There is no point when you're a classic user to use the graph, which is completely normal. It is a tool to be able to build. It's really important to remember it, which implies that in its evolution, it will necessarily be linked to several things. One, the evolution of the ecosystem. That is to say, do we have an ecosystem which requires interconnections and which precisely requires simplification? Are we going to have an increase in developers? Are we going to see an increase in decentralized applications? Are we going to have an increase in requests? That is to say, transactions that will be carried out. That's really what's going to be important. And this is what will determine the future of the graph. Besides, we have here the construction of a tokenomics, which is on a maximum supply of 10 billion GRT. We are close to 9 billion more or less. So we are not far from the finished max supply, so definitive of the project itself. And therefore, it is important to remember if we want to project into the price developments of GRT when we now understand a little bit its operation and its business model. So we are going to move towards technical analysis, which the graph is a very good representation of its evolution. That is to say that we had a very, very strong acceleration at the end of 2020, start of 2021, with the advent of decentralized finance, and therefore necessarily the acceleration of everything that is the construction of decentralized applications, and therefore of all the tools which are around, and therefore necessarily of GRT. Namely that we had a peak, a decline which was carried out, therefore a buying climax of the distribution week off, which was carried out here at 2.8. therefore, which is already very high, but at the same time, we had a max supply, which was very low at that time. Well, a max supply, in any case, a circulating supply, a number of GRTs, which were available, which was very low. Then we retraced, we did a retest, an AR, an ST, and we did the sign of weakness, which we find here, which is a rather classic weekend accumulation, which we find, and we are currently at the bottom of our spawn zone, in which we made here the joint break, which is CESIS. We have had the break here of FTX. We see that we have made an acceleration again with a very nice, effective break-off structure with really a complete recovery. Here of May, okay, we see that Celsius has been swallowed. It is one of the rare to have swallowed so much and to have swallowed even half of the fall of Terra Luna. So we are in something which shows that the GRT actually has a relatively strong weight, especially since we are in February 2023. So the start of the year, which was relatively strong for the BTC and quite weak for many altcoins, which was not the case for GRT in particular. And since then, we are in a form of low lateralization, where we are in the process of retesting the key levels, which are the levels of rupture here, of acceleration, and the levels certainly of rupture here, of the small accumulation that we find here. For me, it's normal to continue to sink. We see that we have a small bullish reaction, but which is relatively low compared to the small movements in the PTC that we have. But my golden zone still remains relatively low for a retest of this lot to go here to retest the imbalance, which is still pending, the end of the imbalance which we find. What can we set as a target? There are several ways to calculate a target. We will do two of many ways. We will have the schematization of wave 1, wave 2, Eliottis, which leads us to do a big wave 3 for the next bull run, big impulsive wave 3 with the 1.618 golden number with a GRT at $47. On this, you will tell me it is still very high, especially since we have a max supply which continues to rise to reach the total supply. I agree with you, except that if we look, it is quite coherent because we would have 10 billion GRT with behind a token which would be around of $4-5. So it would be around 50 billion market cap for a next bull run. We don't forget that liquidity increases from bull run to bull run. So we would have more incentives to push. We would have more decentralized applications, more needs for GRT and an ecosystem which still has not found a way to simply create interoperability. And precisely this time, I am going to end this video with the negative elements because it is important to have them in mind and understand the limits of GRT. GRT works very well as long as we have a real multiplicity of blockchains with structures, okay? The more blockchain we have, the more different structures we have, the more GRT we will need. When we arrive at a process, and we will arrive there, we have no doubt on a uniform protocol which will have a form of regency on the way in which we structure and in which we give access to the data, GRT will have much less impact and will have much less force. And this is precisely where the transition will take place. We will have to see whether GRT will be able to offer new technologies through, why not, a strengthening of indexing, which is what they are currently preparing. There are a few small elements that are starting to fluctuate, but we don't have too much information yet, so I'm not talking about it now, but I think that we will have information within 6 months, 1 year on the developments of GRT, but I think they are in the process of making the switch. But in the meantime, must take into consideration that we are necessarily dependent on the evolution of all the protocols. The more we move towards standardization, the less we will need JRT. The more we go into something that is fragmented, at that point, we will need JRT to simplify accessibility. That's really the principle. I hope you liked this video. If so, I'm sure you'll love the video I made last Friday about CHZ, Chile's crypto. I'll put the link there, and we'll see you tomorrow at 7 a.m. for the daily news.